Now, we mentioned early on how important the opportunity is, but within the opportunity, the importance to be able to market is really key. This is true in any kind of business, whether you're talking residential, or in the mortgage industry, commercial, or even businesses for the people that you're going to be servicing. It really comes down to the marketing and the message. So for success in commercial originations, it's about differentiating yourself from all the other noise that's going on in the marketplace, all the other marketing. And you need to be able to speak specifically to your clients or your audience's needs, the prospective clients. So here's what we're going to do. First of all, I want to stress the importance of understanding that through all of this marketing, you are the most important asset. You are the most important ingredient in good marketing. And you have to remember that, regardless of all the technology that's out there. And your goal is really to be able to get the client, get the prospective client, I should say, to be predisposed to using you for their financing. And we're going to cover 3 areas that we're going to focus on in this presentation regarding sales and marketing. And the first is going to be to identify the small balance commercial targets that are out there. We're going to talk about how you're going to engage them with your messaging to be able to convert leads. And then we're going to talk about overcoming objections and closing deals. So let's jump into identifying small balance commercial clients. Well, who are these people? Well, first of all, they are the real estate investors that you may already be doing business with on the 1 to 4 family front. They also are going to be business owners, people that you already may have done residential deals for that own a business or some sort of practice. The other thing you're going to find out as you start targeting, and maybe a great place for you to start, is in multifamily and rental property category, because that's where you have a huge percentage of potential business out there. It represents a significant part of overall commercial transactions that are done. You're going to be focusing also on the small to mid-sized businesses, typically ones that don't have a whole lot of employees. And also, these are people who in many cases are having difficulty in getting traditional financing, or they don't want to take the traditional financing because of some of the things that come along with it, such as cross-collateralization or some limitations or documentation requirements. Now, the other question you then have to ask is, where do they look for financing? And first of all, many of these people are going to go to their referral sources, whether that be their family, their friends, business associates, real estate agent. But in particular, you're going to find that they will typically go to their accountant, their attorney, any business associate who they treat as a trusted advisor. Those are the types of people who they can go to and say, hey, where would you go if you needed financing? Also, now with the internet, there's much more research going on, and they're looking to places on the internet. So we're going to talk about how to attract that business as well. This is an important slide, and it's important for you to understand exactly what motivates these people when it comes to looking for their financing. Why are they doing this? Well, first of all, they may be purchasing a location for their business, and that one's an obvious one. I want to have a place to, as an investment for me as well, but a place to house my business where I can control the cost of that location, the rent that I would typically might be paying prior to that. I want to be able to get the benefits of that the landlord would typically get. Also, they may be looking to buy another location. They're looking to expand. This is another great reason. They're going to another territory. They want to add another storefront. Or they may be looking to reduce debt and improve their cash flow. That certainly is something that most businesses are always looking to try to do. Frequently, you're going to come across people who are in balloon mortgages, and these balloons are going to be coming due. They're looking for financing. Also, there's plenty of reasons why they need to be able to cash out of that property. They may want to purchase equipment. They need operating capital. They may be looking to other investments, or in fact, other needs for funding that may even be for personal reasons. Now, when we look at referral sources, some of the top referral sources you see on the screen there for small balance, and here's your existing clients. Appraisers are a great one because they know they've been to some of these properties and they know where they are. Title companies, realtors, I mentioned your accountants, CPAs. Also, there's a good one here, other mortgage lenders, because so few do commercial that they're seeing these deals as well. So for you to be able to get referrals from them, you want to connect to make sure that they know you're doing commercial deals. The banks and credit unions, and also national organizations. So you use your imagination. There's a lot of opportunity within that list. But let's go a little bit deeper. In fact, let's talk about existing clients. Now, you have done residential transactions. You've got 1003s that have collected information. And this is where you're going to find opportunities, because if you check with the scheduled real estate owned on the 1003, you're going to find, if you've collected the information, that is, who has a commercial property and who you should be reaching out to find out if they're looking to add, require another property or refinance it. But you also have identified on your 1003 the people who are self-employed or who are entrepreneurs, and to be able to reach out to those people as well. So that's a great source of business that's literally right in front of you. And then another one that I mentioned is the financial institutions. Keep in mind that the banks, I don't know what the percentage is, Mike, but there's a significant number of transactions that they don't do, and it's probably in excess of, I don't know, what, 65%?
Close to 80% of most banks pass on
80%.
Turn down the small balance commercial opportunities for one reason or another.
There you go. So there's a lot of people out there that fall into that category. And let's face it, if I'm a bank and I turn somebody down, what's going to happen if they go down the street to another bank who does the transaction? What do you think is going to happen? Well, that institution is going to require them to bring their assets with them to get that deal. They're going to lose a customer. So rather than lose that customer on a turn down, they can provide a lead to you, essentially, that will allow them to keep that relationship, and you end up getting that transaction. Let's talk a little bit about social media, and this has become such a big part of people's marketing. As you can see, 65% of Americans have a social media profile. That's a lot of people. And if you can learn how to utilize social media, you can start really focusing on those particular people in your social media database, if you will, and create relationships there. So you're talking about a fair amount of work, though. And I think that's important to put that out there, because if anybody's tried to do this on their own, they know that you do need to have some sort of strategy behind this. You can't just start jumping into social media and hither, thither, and yon and trying to get results, because you do need to be able to create content. You do need to be scheduling your posts and advertisements, and you do need to be tracking what's going on so you know with metrics what's working and what's not working. So that represents a fair amount of work, but there are things you can do to keep it fairly simple. One of the best ways, perhaps, is with LinkedIn. And LinkedIn, as you probably already know, is the major B2B social media platform that's out there. Now, here's a couple ways that you can improve your LinkedIn presence. And by the way, optimizing your profile is pretty important. As you can see, it literally, according to LinkedIn now, you are 40 times more likely to receive business opportunities if you have a complete profile. And that includes you making sure that your summary is complete. That's one of the first places I know that I go when I'm checking out somebody in LinkedIn. Also, start joining LinkedIn industry groups. And there's plenty of those in the mortgage industry, and I think that's important that you're engaging with other mortgage professionals, especially around commercial, so that you can learn things there. But I think it's even more important to start looking at different other industry areas that you may want to target to be able to get their business. So these are your target audience. Where do they hang out in social media on LinkedIn? Also, writing articles. You may not be what you consider to be a good writer. There's a lot of resources out there that you can actually give information to. They will create an article for you. So be sure to check out online sources of article creation. Also, be somewhat, I guess you might say, careful in who you invite in. I mean, this is really a quality versus quantity. You don't want to just sign up everybody and anybody, or just say connect with everybody and anybody. Try to be a little bit selective in looking at people who, A, could be a referral source, or B, could be potential clients. And as I said there, it might be a good idea to try to focus on at least one quality relationship connection that you're making per month.
If you go back to that page, I just want to jump in. Those
Sure.
last bullet points come directly from the founder of LinkedIn on the mistakes that people make when they set up their account. You know, you need to vet the people who want to connect with you. Obviously, they should have like business interests, not to accept everybody. You said quality over quantity. It's important, and you should be making introductions, because the more people you introduce to one another, the more likely that you're going to get introduced yourself.
Right.
The one biggest mistake I see when people solicit me as a contact in LinkedIn, I accept them, and then 30 seconds later, I get solicited for non-mortgage business-related services. That is like almost an instant delete, and blocking them from being a LinkedIn member of mine.
Okay.
That's a big mistake to make as well. Don't solicit somebody right off the bat for services that it's one way. Okay. Okay.
Sorry, bud.
We lost
Okay.
you. You're back. Okay, we can go on to the next slide, Facebook.
Got an interesting. You know,
Yeah, you're breaking up again. So let me pick this up from here, Steve. Now, if you look at Facebook, for most people, Facebook people think of them more as a social network as opposed to a business, but Facebook has really done a wonderful job in expanding out their users to include businesses, where it's now one of the fastest growing social media channels for businesses. So, you know, it allows you to target your potential customers and identify with them. We've done that ourselves here by where we will target specifically folks who have done business with us or haven't responded. We will target them on Facebook also for business. So you can utilize your existing database to target them through Facebook as well. Purchasing Facebook ads to reach new customer audiences. Again, I'm sure if you're on Facebook, it's more than just sharing pictures of your kids and graduation and everything else. I'm sure you see Silver Hill ads, as well as a lot of our competitors out there, because they are utilizing that as a business. And you'll find that people do share their personal information on Facebook, so you get a higher quality source list, because people on Facebook, they will use their personal email addresses as contacts. Those tend not to change when they change jobs, so you can continue to stay in front of them even when they are moving around from job to job. So you definitely get you get a nice quality database from Facebook. We've began to utilize it more frequently. We've targeted certain ads that we want to do. We see our competitors. It must be working, because we see a lot of imitation from our competitors once we utilize ads on either Facebook or LinkedIn. So it must be resonating if people are emulating what we're doing.
Hey, Mike. Sorry about that. Sorry, everybody. Just disappeared there very briefly. But okay, it's the link right there, I think, is pretty interesting. If you want to take the time to check that out on the Facebook lookalike audiences. The next area that we're going to jump into is how to improve your lead conversion, and it's about the messaging on this. Here's a quote from our man Ben Franklin, and smart guy, of course, Ben knows what he's talking about. And what he's talking about here is content. So let's talk about the idea of not just providing a messaging, it's engaging messaging. You can't just find your audience. You've got to be able to give them engaging content that's going to get them to convert into customers. So the first thing you want to be able to do is to look at your strategy and be able to optimize your messaging. Obviously, when you're trying to put your content together, it is about the appeal. It is about what's in it for the person who's listening or reading. So making sure that you do engage them. It's not just about putting up ads. That's not where it's at anymore. It's about making sure that they see value in what you're providing. So how can you improve this? Well, there's a couple things. First of all, you can first segment your database. We're going to cover this a little bit deeper. Be able to tell stories. Use your social proof through social media. Repurposing your content. And finally, developing the meaningful key performance indicators. So let's get into those. And the first one is really about profiling your target audience and segmenting your database. This is pretty important, and obviously, as you can see, there's a sample here of segmentation breakdown. People who are not engaged, who have not opened your email, people who are engaged, they've opened your email, but they're not transacting that, or they are transacting, and maybe just once. And then there's the people who have multiple transactions. Now, I'm going to tell you an even simpler way of looking at it. Maybe what you should be looking at from a high-level standpoint is, who are your referral sources? Segmenting your referral sources out so that you have you have your past clients and your prospective clients. Those are different messages that you should be delivering, not delivering the same message to all audiences across your database. So that's what the idea of segmentation is about. And then there's the idea of lead scoring. Now, I mentioned to you, we're going to go into some things that are a bit deeper and done by bigger companies. But the bottom line with lead scoring is this. The people who do check out your information, people who do engage you in some way, these people are more valued. Therefore, think of it as they get a higher score, and you will need to be focused on them with particular messages. And as it indicates at the bottom there, this isn't just about somebody opening an email. Are they taking action and clicking through to look at your information? Telling stories, and let's just look at it this way. Throughout a history, all civilizations have used stories to teach. And that isn't any different than what we're doing right now in our marketing, particularly with social media. But telling stories, and this isn't about beating your chest and saying how great you are. This is really about saying why you need to do business with me and how I've helped other clients so that you can see how it's going to help you. Also, writing, or actually anything, if you're even doing videos, you want to be able to do that from the audience's point of view. You want to put yourself in their shoes as you start to create this type of content and these stories. You obviously are, in fact, the hero, but you do need to remember this. They're constantly looking at it and saying, what's in this for me? So you do need to get around to saying, okay, yeah, I may be the star, but these people are looking for solutions, and here's how I can provide the solutions for them. Using social proof. And social proof is really what people see that other people have done. That's basically what social proof is. It is seeing what other people have tried, used, purchased, and saying, hey, I saw their comments, they like it, I'm going to take a similar type of action. Using testimonials is a huge part of this, and I think an underused part of it for a lot of people. There are certainly, it takes a little bit of work to get testimonials. You want to make sure that you get permission, but using those testimonials either in writing or in video are powerful. And you can also add those, or let that complement your articles that you're creating to support your message. Now, when we're talking about testimonials, there's a lot of places that you can utilize this. This isn't just one page on your website. you can actually utilize testimonials in different areas. For example, how about on your About Us page or Contact Us? Certainly be able to utilize those throughout emails that you send out in your email campaign. And of course, in your social media profile page, especially on LinkedIn, where people are going to say, and yeah, I see people do this pretty well, some of them utilize testimonials in their profile in LinkedIn.
So Ski, let me jump in on this. I think one of the things we do extremely well is our testimonials, unsolicited testimonials from both our brokers and from borrowers. I mean, we talk about this, and we've discussed this on several previous webinars. But if you go out to our website, you're going to find not just closed loans. Everybody puts up closed loans. I mean, tombstones. You know, it's a powerful tool that shows that you're closing transactions. But man, we've dealt with lenders, other lenders, and I'm going to say that some of my competitors are in this, are grouped into this. It's painful. It's extremely painful to close a deal with them. It's 30, 60, 90 days. It goes on and on and on. You get retraded. And it's great that they put up a tombstone, but you rather have root canal than go back through that same experience with them. Go out to our website. You'll see what we have, at least a dozen testimonials out there from different brokers, not, you know, John C. from, you know, Pahookie, Mississippi. We have brokers who actually give us their first, last, and their company names with unsolicited testimonial about our process. Why is that important to me? We are relationship-based. So if you look at the testimonials, those are much more powerful than putting up a tombstone. Yeah, great, you closed the loan, but it was a painful process for everybody involved. You were retraded, so you lost the client. Great that you have a $3 million loan up there that you closed, but the broker lost the client that they had cultivated for years. That doesn't get said on their website. What gets said is, here's the loan that we closed. You look at our website and we use the testimonials. I mean, you should use that personally, and when you guys are looking for lenders in the marketplace, if they don't have testimonials and just have tombstones, you have to ask yourself, what kind of experience what kind of ride am I going to have with this lender with the transactions? And we see it all the time. We get appraisals that come in from other lenders. We get brokers who have pulled the deals from the other lenders. Why? Because they don't deliver what they're going to say they're going to deliver. Ask them for testimonials. Forget about the tombstones. Those are easy to do.
Yeah, absolutely. Great point, Mike. Great point. And I think we showed some of those early on in the loop prior to the start of the webinar. Let's talk now about repurposing content. I talked about being able to create content, it's an important part of the messaging, but repurposing it. Let's figure out a way that you can create something once and use it in multiple ways. Obviously, you can't stick a entire article into Twitter, so there may be a particular piece that you want to put in Twitter that's going to drive people to your website and to a particular blog post that you might have. You may want to be able to create scripts from your articles and be able to do a video. Another thing is infographics. I don't know a whole lot of people that are able to do that. You can find it pretty easily on the internet, people that will actually create infographics pretty reasonably for you too. Also, you want to be able to think about any content up front about how you can reuse it. In other words, instead of thinking about it after you create it, think about it up front, how you can in fact maximize the use of that piece of information. The last piece are key performance indicators. Now, I realize that if you're a solo entrepreneur in the mortgage business right now, it's going to be pretty basic. You're going to be looking for, obviously, revenue and your return on investment and certainly the cost for acquisition of a lead. And probably some people don't even do that. But as you start to get more astute in how to utilize your marketing, you're going to want to know things like, okay, how many visitors came to my site? How many of those people, where were they on my site? Where did they look first? Where did they go second? Also, is your messaging actually driving business? And of course, I mentioned it earlier about clicks. Effective email marketing isn't about just getting clicks. It's about getting people to take action and not just opening, I should say, not just opening the email, but actually taking action and clicking through to look at information or requesting additional information. But it's important that you do have some way of measuring what's working and what's not working. A couple of final metric thoughts on this. There's a lot of technology out there that you can, in fact, utilize to help make this a lot easier. Obviously, you have to spend some money to do that, but it's important to make sure that you are, in fact, putting things in place to discern whether you, in fact, your marketing is working. You just don't want to be doing things for the sake of doing things and say you're marketing. You want to see what's working. So figuring out exactly where you're getting the best return on your effort is a critical component of KPIs. Hey, Mike, you still there?
I'm still here.
Okay, I'm going to turn it over to you and let you talk about overcoming obstacles and closing some deals.
Let's roll.
You ready?
I'm ready.
Okay.
So again, I just briefly touched on this. Our marketing strategy shouldn't end at client acquisition. In this for the long term, we are all transaction based, but we also are relationship based, where closing one deal hopefully leads to another closing, which leads to another closing, but more importantly, that it leads to more client acquisition, because now we're getting the best form of advertising in the marketplace is referral business. So we always say that it's important to be transaction based, but more importantly to be relationship based. So the roles that it doesn't matter if you're doing mortgages or you're a CPA or an attorney, you have to be a solution provider. So part of that is understanding the issues and how do you resolve them in the best possible way for your client. One of the ways is through communication. Communication is a two-way street. Understanding what the borrower is trying to achieve and the solutions that you can provide with them, and communicating the different solutions that are available to them. You're following up with your client, and if you're, again, mortgage broker, with the lenders on both sides to see how you can get that issue resolved in a favorable manner for everybody involved. And then the last one here is where Silver Hill likes to come in and say, we are relationship-based with our clients, who are the mortgage bankers and the mortgage brokers in the marketplace. We provide support in terms of helping structure a transaction and providing solutions. We're always available to take a phone call. If there's a question about the program, a question about the products that are being offered, we're here to listen. We will give a fast no as well as a fast yes. If the deal makes sense, we'll move forward. If the deal just doesn't fit our box, we're not going to string you along. We're going to tell you it's a fast no and probably point you in the right direction for another lender whose product might be a better fit for your borrower. Again, we don't have an issue with that because of the service that we provide. We feel that we refer somebody else out and we help them on this particular deal. All we ask for is that you remember us on the next deal. If you're new into the industry as a residential broker, the easiest opportunities to get started with are multifamily and mixed use. Multifamily you're probably already doing if you're doing 1 to 4 units. It's not that difficult to expand out to 5 units, 10 units, 20 units. How you underwrite those transactions, very similar. They're cleaner. You don't have the environmental issues. You don't have multiple commercial leases. These deals tend to get closed within, call it 20 to 30, 35, 40 days at most. I don't want to say they're cookie cutter, but they're relatively clean and simpler transactions. And more importantly, they're the most prevalent property types in the marketplace on a commercial transaction. So come prepared. This is where you guys differentiate yourselves in terms of, again, if you're an attorney, a CPA, or if you're a mortgage broker banker, have a complete package of documentation that the lender is going to require in terms to underwrite a transaction. It allows me and my underwriters to fully understand the transaction. It also avoids the retrading that might occur down the road when we do get a complete package in, and the information that's provided in that package is different than what was presented, way different than what was presented up front. So we like to get a clearer, clearer picture of the transaction, and come prepared, understand where a particular lender operates and how they underwrite. An SBA lender is going to underwrite differently than a Fannie Freddie small balance commercial lender, and they're going to underwrite differently than a CMBS or a non-bank lender. And we touched on this point previously, focus on constant communication. It's always a two-way street. You communicate, you manage an expectations. We lay out to our brokers, mortgage bankers up front, the timeline, what's expected, when they can expect it, and what they can expect back from us within certain timelines. We communicate our timelines. I always prefer, I love purchase contracts. I love borrowers who are ballooning. Why? Because they have a sense of urgency. We get their cooperation. We can close deals within 30 days, within 25 days, if we get borrowers' cooperation. But we will go out and say, we can close deals 30, 45 days, and all dependent upon the borrower's cooperation and how quickly we get documentation from them. And then we communicate with the broker and the borrower just to make sure that nobody likes surprises. We'll tell them what we're going to do, when we're going to do it. Here's your leverage, here's your rate, right? We don't wait for the appraisals to come in, as certain of my competitors will do, and then start to underwrite the deal. That's a problem. And if you have a lender that's going to start underwriting the deal when the appraisal comes in, you are going to get retraded. Not if, you are going to get retraded on that transaction. And it's going to put you on a bad situation with your client. Because it might be a client that you've been cultivating for months. You spent a lot of time getting them on board with you. And then you're going to have a lender who's going to submarine that relationship for you. And then they're going to move on to the next broker and the next transaction. And it's going to leave you holding the bag, trying to explain to your customer why you brought them to a lender who provided you an LOI or a term sheet within 2 minutes, and you're running with them. And then 3 weeks later, we got to restructure the deal. Why is that? Well, we just started underwriting the deal. So common objections that you will get in the marketplace in terms of commercial loans, rate. We're a non-bank lender. If you're looking for the lowest rate in the marketplace, I always tell my brokers, bankers, go to the banks. Go to the banks. They're going to give you the lowest possible rate. You're going to get the decent leverage with them, but you're going to go through an underwrite. Again, I stated before, almost 80% of the small balance commercial lenders or borrowers get turned down by banks. So if your borrower is bankable and can go through that process, they should go through that process. But the vast majority of people are not going to be able to qualify for bank financing. They're going to have credit things. They have investment strategies where they don't want to get tied up long-term with the bank. They don't want a depository relationship. So you have to understand what the borrower's strategy is in the transaction, because the lowest rate might not be the best rate for the borrower. Appraisal cost on the commercial transaction is much different than on residential. I've seen appraisal costs cost anywhere from $1,500 to $25,000, depending on the property type, the complexity of the transaction, where it's located. But on average, on the small balance commercial, you're looking at $2,500 to $3,000 as an average appraisal cost, which is far different than the desktop reviews that are done on the residential. And you will, in commercial, you have all sorts of prepayment penalties that are out there, and there might be defeasance, yield maintenance, straight up, 5% or fixed percentage for a fixed period of years, but they're definitely different than what the prepayment penalties are in residential, which doesn't exist. So again, if you have a borrower who wants to be in short term, a higher rate, with little or no prepayment penalty might be better than a bank loan that's going to have prepayment penalties associated with it. Even though the rate might be lower, it's not going to allow the borrower to achieve their objective. And then documentation, you need, my borrower doesn't have tax returns or financial statements, how am I going to qualify them? There are different programs available out there. Everybody from Fannie and Freddie, who offers a stated income product on their multifamily. We offer both a stated income on our commercial and on our investor program. And I'll let you guys in on this since you have attended our webinar. We will be rolling out a program on June 1st. It's going to be unlike any other program in the marketplace. We're not collecting on owner-occupied transactions, and we're going to roll this out June 1st. So if you have any questions, I would strongly recommend that you contact your regional manager, and they can walk you through the process. But we're not collecting personal or business tax returns on owner-occupied transactions. It has some caveats. The borrower has to be in business for 5 years, and we're starting with a minimum credit score of 700. But all we're requiring to underwrite that transaction to get it started is basically 3 months of bank statements to prove liquidity. So again, I'm not getting operating statements. I'm not getting personal or business tax returns. We're going to take, we have a proprietary underwriting process that we're going to take the borrower through and to see if they qualify. So if you have a borrower that can't provide tax returns, we all know that small business owners are very creative in sheltering income. We have a program for them. So about Silver Hill Funding, we are a non-bank lender who provides alternative financial solutions to borrowers who don't or can't qualify for bank financing. So again, if you have a borrower that can go the traditional route, I encourage you to do that because you're serving the best interest of the borrower. Some of the reasons why the borrowers are here versus the traditional, we talked about a lot of these, lack of documentation. We have light doc or state income program available both for the owner occupied and investor properties. Seasoning of ownership. This is a big one. We have no seasoning of ownership requirements, no title seasoning requirements, and on cash outs, there's no seasoning requirements there. We will allow a borrower to cash out to fair market value of a property versus on a cost basis. The caveat there is that the borrower has to demonstrate that they've enhanced the value of the property. Liquidity, we have a standard 6 months of liquidity of P&I. We have a little flexibility there, not much. Credit scores, minimum of 650. We do have, borrowers can't have foreclosure bankruptcy requirements within the last 2 to 4 years. It's on a case-by-case basis, but we will look at that. And here's a big one out there, stabilization. Stabilization is defined by us, 75% of economic occupancy during the past 90 days. So on the fix and flip, on the multifamily properties, you get an investor that buys a property that's basically underperforming, it's a 50% occupied, they go in there, they drop a couple $100,000 in improvements in there, take the occupancy from 50 to 75%, move the rents to market level rents. We'll allow that borrower to cash out at fair market value, provided that they have 75% occupancy over the last 90 days. And that economic occupancy means that the tenants have been paying rent for the past 90 days. That's a big one. This information is available on the website, so I'm going to just go right through it. You can read this as well as I can read it to you. Basically, the loan amounts are from $250 to $2 million. We will drop below that $250 on a case-by-case basis. The property types are plain vanilla commercial real estate. We do serve what we feel is a niche of underserved borrowers in the marketplace who are basically the small business owners and investors. That's our bread and butter. And we do finance purchase, rate, and term refinance. And just in case you missed the last slide, we do a lot of cash out refinance. program options, again, these are out there on the website. I can read them to you as well as you can read them to yourselves. But the big ones here are the LTVs up to 80% on our Tier 1 properties, which are multifamily and mixed use. We have flexible prepayment options. We do both. We finance both owner-occupied and investor properties. So here are some success stories. You know, when people go, what type of properties are you doing? You know, you're non-bank lender. You must be doing some really ugly, tough transactions, right? This is a multifamily. It's actually a blanket of 4 properties that total 12 units, located in Georgia. Not a bad-looking property, right? You look at it, it looks very bankable. The challenge here for the borrower was he was an out-of-state investor, and the seller could not provide financials on the property. And when I mean financials, a basic operating statement. Got a rent roll and nothing else. So the borrower had to go light doc. So when you couple that with being an out-of-state investor and a light doc program, the banks kind of shed away from this transaction. We were able to provide financing at 70%, get this deal closed within 30 days. We gave them a nice 10-year fixed term amount and amortize it over 30 years, which allowed them to maximize their cash flow. So my rates might be a little bit higher, but when you amortize it over a 30-year term, what my borrowers and brokers are looking for is the lowest monthly payment. So even if you have a lower interest rate available in the marketplace, but it's only being amortized over 20 or 25 years, if you look at a 30-year amortization at a higher interest rate, the borrower actually could be at a better cash flow position than a lower interest rate. So getting started with Silver Hill Funding. This is a promotion that we're running next month as well. Actually, it's this month. I'll get to the promotion next month. So if you submit a transaction and we get it lettered, an LOI out, and we get the funds back, and I know we're coming up towards the end of the month. This month we ran a promotion where it's we get the application fee up front, which is $2,000. We'll pick up the cost of the appraisal to $3,000. So the only thing the borrower has to come out of pocket initially for is our upfront fee of $2,000, and we will absorb the cost of the appraisal up to a $3,000 charge. I mean, that was a very successful promotion for us. If you have a transaction that's on the fence, bring it to us. We can get it papered and lettered by the end of the week, and we can have definitely, you can get it signed up by next Wednesday. We're good to go with this promotion. An item that we have available online 24/7. Just go out to our website, register. You can price your own deals 24/7. All you got to do is go to utilize the pricing calculator. There's 4 or 5 data points that you need. You can run different scenarios, get different pricing. If you want to, layer in yield spread, that's the YSP there. You can layer it in there, and then actually generate a term sheet on the deal that you can bring to your borrower that will give you indicative pricing that you can present to your borrower. It's not an LOI, I will tell you that, because there's only 5 data points here. An LOI will dig in a little bit deeper just to make sure that the numbers make sense in terms of how it's underwritten. But you can actually produce this 24/7 and have a term sheet that you can present to your borrower. The Hill Marketing Toolkit. This is all available online. We have a tremendous calling for this from our brokers. All you have to do is register, go out to the marketing toolkit. You can download any of these, the flyers, the scripts, anything that you want is available. You can customize them with your own name and your firm's name and distribute them to your clients. And then broker resources. There's a couple of blogs that I would highly recommend. If you're interested in social media, about 6 or 9 months ago, we did a series of 3 blogs on social media that you can review. So if you're just getting started utilizing social media, it's a great place to start. If you're familiar with social media, It's not a bad blog just to walk through because you can pick up some tips as well. And then again, we also have how to use your linking summary to stand out from the crowd. That's another social media tool that you can use. There's videos that's available that you can download 24/7. And then we also will host all of these webinars, typically within 24 to 72 hours. At the conclusion of the webinars, we're going to go through, clean it up a bit, and then we post them to the webinar. So if you have some downtime over the weekend and you want to kill an hour or so, you can go out, look at the videos, review the blog post, or review the webinars. So the best advice that I have, if you have any questions regarding Silver Hill or any of the resources that we provide to the brokers and the mortgage bankers, contact us. info@silverhillfunding.com. I get that in email, but you can call us as well. Contact with your regional manager, depending on what market you're located in. That contact information is on our website, which is on the next slide, www.silverhillfunding.com, along with our contact information. One thing I will tell you folks, I'm going to add this to it, is that for the month of June, we're going to be running a promotion. To get started with us, it's going to be a $1,000 upfront fee, $1,000. So all the borrower has to provide to get started. That will cover, that will allow us to get started with the transactions. All the other third-party fees will be due at closing. We hear the feedback that we get from our brokers in the marketplace, and we want to test this, is that the biggest challenge that you guys have on small balance commercial loans is getting the borrower to come out of pocket initially to get started. Okay, I think it's an easier sell for you guys when if the borrower comes out of pocket $1,000, the appraisal's been ordered, title's been ordered, you're going through the process, the deal underwrites, the property appraises. Okay, now they have to pay the third-party cost at the closing table. An easier sell than trying to get $2,000 to $3,000 up front from your clients to get a deal into the process. I know other lenders out there that have lower fees initially, but they whack the borrower on the back end. They hit them for everything, including the kitchen sink. We're very transparent. I will give you an estimate of our fees so that nobody's surprised. We're totally transparent. And again, we're relationship-based. That's the story that we want to tell. We love to do transactions, but we're in this for the long term. We want to build relationships with the individual mortgage brokers and mortgage bankers. We want to be your resource. We want to be your go-to lender, and anything that we can do to make life a little easier on you in terms of transacting and understanding our process, we're here for you. And there's the number. You can dial that in. There's somebody available 5 days a week, normally from 8 to 7 here. Just dial 888-988-8843. If you want to send me an email, my email is easy, mikeb@silverhillfunding.com, or you can use the info@silverhillfunding.com. That will work as well.
Well, Mike, great job. I do want to mention one thing. I think that for those people who are listening that are really new to the business, I don't know of a better company to start out and get the help that you need to be able to be successful in the commercial arena. And I don't think anybody does a better job than we do at Silver Hill Funding. So encourage you to reach out and get the help you need to get moving. Mike, any questions? We get any questions from the audience?
Yes, we do have one of the, will you be sending out this presentation? We've got this request 3 or 4 times here at Ski. We will be posting this to our website within the next 48 to 72 hours. By the end of the week, Zach, is that fair? So by the end of the week. Do you finance medical condos? We will do individual condos for doctors, dentists, attorneys. We prefer owner-occupied versus investors, so commercial condos are available. Compensation is always a big question. We protect our brokers every step of the way in terms of protecting them. When we issue our LOIs, the broker's compensation is listed in the LOI, so when the borrower gets to the closing table, there's no amnesia that they kind of forgot what they agreed to earlier on in the process. The broker's compensation goes on the closing statement with the exception of YSP, which is paid outside of closing, and it's not disclosed. If you want it on the closing statement, we can put it on it, but to date, out of all the yield spread premiums that we've paid, Ski, we haven't had one request to put that on the closing statement. So they all get paid outside of closing, and that's normally a 7 to 10 day process. Where do we lend? We're a nationwide lender. We're in 38 states, the top 250 MSAs. We prefer, more urban locations than rural locations. We do have some population requirements, but if you're in the top 250 MSAs, you should be good to go. My rule of thumb is if you have a lot of green or water or sand around your property, it's probably not for us. Seller seconds. No, we are only in a first position here. We do not allow for secondary financing of any source. So it's only a first lien position and with no seller seconds.
Excellent. And any other? Any more questions?
Most of the questions that we have, we've covered during the presentation. If I haven't addressed your questions, again, call us at 888-988-8843, and somebody will be here, be able to assist you. But I want to say thank you to everybody for hanging in there with us. I know we had a little technical problem early on.
Thank you.
Which we overcame. Ski is a world traveler. He's at the Texas MBA. Where is that? In Dallas this week?
No, it's in San Antonio, hot San Antonio. I had to come outside to be able to do this, so you have no idea what that's been like. But it's a beautiful day out here. And I really do appreciate everybody hanging in there. I hope this information was really valuable. And we really encourage you to experience the Silver Hill funding difference and reach out to us, start a relationship, start doing business with us, look for our help. And, man, we're just charged up about the idea of helping you. Mike, thank you for an awesome job as usual.
Steve, enjoy Texas. Get some barbecue out there, and we'll talk again. Thank you.
You got it. Thanks, everybody. Take care. Have a great one. Bye-bye.